market news now, Asian stocks slipped to three-week lows as investors tempered expectations for cuts to U.S. interest rates and waited on U.S. jobs data. The U.S. jobs openings data is due at 5:30 South African time, and broader hiring figures, which had last month showed signs of a slowdown in the job market, will be published on Friday. In commodity trading, oil prices were little changed amid uncertainty over voluntary output cuts by oil cartel OPEC+, continued tension in the Middle East, and weak economic data from the US. Locally, taxi financier and used car dealer Transaction Capital reported a 3.3 billion rand fall in annual profit as it went from a profit to a loss, and what the company describes as undoubtedly being the most challenging and disappointing year in its history. To give us a little bit more on the markets, we're joined by Martin Smith, who's a portfolio manager at Anchor Capital. Martin, thank you so much for your time. We're still seeing strong momentum in the U.S. and expectations are the Fed will continue to hold that hawkish stance when it comes to policy. With all of that playing out and us looking forward to some of the data coming in, how's the market sentiment right now?
Yeah, I think you've seen a lot of momentum. You saw a very, very, very positive November, both locally and offshore. And I think what we're seeing offshore at the moment now is a little bit of rotation out of big tech. I mean, they're calling them the Magnificent Seven, which have done incredibly well this year, into kind of smaller and mid-cap spaces, which I think the market's been waiting for a while. And then locally, I think we are feeling the pressure a little bit on the back of what's happened out of China with that downgrade. But I think the market's probably due a little bit of a breather given the very, very positive moves that we saw in November.
Let's talk company-specific news for now. Transaction Capital reporting their numbers. They're dealing with an enormous debt pile. They're having to restructure SA Taxi. And you look at the numbers up this morning, that share price was up 10%, even though year-to-date it's down 78% or so. Were there any green shoots at all in these numbers?
So you are right. I think the debt is something that investors are focusing on and how that's going to be sorted out in the strategy there. And the numbers themselves weren't actually great from a kind of reporting perspective, but I think it's all to be expected. But to your question about green shoots, I think that's why you've seen the share price rally very much this morning, is because you're seeing things like new initiatives that they're going to be doing, things like potentially unbundling We Buy Cars and running it as a different entity. So they're doing things going forward, which are looking very, very positive. And I think that's why you've seen such a big bounce in the share price. I think it was up about 10% the last I saw today. So hopefully looking good going forward. But I think the one thing that they probably need to get a little bit more clarity on, or shareholders want to get more clarity on, is around the debt and the funding.
The one thing that caught my attention is the rally that we saw at the start of the week, and not just gold, but in Bitcoin. From what you're reading when it comes to market news or investment news out there, is there any kind of correlation here in what we're seeing in the rallies?
I think it's twofold. One, you're seeing this environment where you've seen a little bit of dollar weakness kind of across the board. You're also seeing interest rate cuts being priced in from a dollar perspective. So lower rates, lower dollar, and that feeds quite nicely into the gold story and somewhat into the Bitcoin story. And I think the Bitcoin story also has a little bit of increased sentiment and increased kind of positivity in the market, which followed through into the market itself, obviously in November and a little bit of December. So lower dollar, lower interest rates in the future, and a little bit of positive sentiment, I think, is the reason why we've seen those two instruments rally a bit.
In yesterday's discussion with our analysts, we had a brief reflection on the month of November. And the one thing that I managed to notice was that if you look at emerging markets, I mean, they had their best monthly rallies in a year, all of that taking place in the month of November. What's your conviction on emerging markets going forward?
I wish it was a little bit higher. I think you've seen not the best data coming out of China, obviously today, also the downgrade. You've seen some good, some bad from a kind of economic and inflationary perspective out of China. So it's been difficult to kind of get too excited about that. But I think when that does come, and the same with South Africa, if we sort out things like load shedding and the like and get a couple of things right, the valuation in terms of where our market's sitting at the moment is actually very, very, or can be quite a bullish period if we see things kind of move in the right direction. I think you'll see a very nice rally in emerging markets if things in China work out and South Africa sorts out some of their things, along with global interest rates continuing to go down and sentiment picking its head up. I think it could be very, very positive, but it's difficult to get excited about it just yet because, again, you see South Africa's GDP number today, you've seen this news out of China. So we probably need to wait for it to turn, but when it does, I think there's potentially a very, very big opportunity.
If you had to try to look ahead at 2024, what would you say are some of the risks that we should be mindful of as we go into that year?
So I think locally, I think what I spoke about now is just China, which obviously has quite a big impact on what happens on the JSE and how that unfolds, as well as kind of our own local stories with things like load shedding and the like. Hopefully that sorts itself out because, again, from a valuation perspective, we're primed for a nice run. And I think offshore, everyone's talking about rate cuts, but the reason why they might cut rates quite aggressively is because you might see a bit of a recession in the States. We don't think that's the base case, but there is the potential for this higher for longer narrative that we've seen in the States can maybe push that economy into a bit of a recession. Again, not our base case at Anchor, but it is something to be mindful of, obviously.
As we wrap up, one piece of opportunity that is out there right now.
I think offshore bonds at the moment, US bonds, I think will be attractive in an interest rate cutting cycle. So that's quite a nice place to have some funds. I think equities are maybe looking a bit kind of evenly priced from a valuation perspective. And then if you've got the time and potentially the stomach for it, I think South Africa and some local equities and some local EM, because when it turns, I think there's an opportunity. Or if it turns, I think there's opportunity.
All right, Martin, let's leave it there. Thank you so much for your time. That is Martin Smith, who's a portfolio manager at Anchor Capital. And looking at the gold price right now, which we did see rally, it's trading at around $2,025 a fine ounce. That rally losing steam as the dollar continues to hold firm and we wait for further U.S. economic data. We're down about 1%, and investors saying going forward that gold rally seems a little bit bullish. But we'll keep an eye on that. We're going to take a quick break, and when we come back, we'll have more news for you, so stay tuned.